Hi there, you're watching Buy Now, Sell Now on ET Now with me, Shreyanshi Singh and Snehisha. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But first things first, let's take a look at the markets. And Snehi, lots of green on the screen when it comes to the markets.
It's only green on the screen. Anywhere you look. In fact, I'd like to draw your attention to the bottom of the screen. Whatever index you're looking at right now, be it the benchmarks, the broader markets, it's been a stellar recovery from the day's lowest point. And in fact, we started only on a very strong footing, so there were no complaints there. For the first time in a very long time, we were once again regained the 23,600 and 600 level. We've crossed that. We're sitting firmly at the day's highest point of 1.1% uptick coming in for the Nifty. Sensex also in tandem, a 1.1% uptick there. It's a 900-point rally coming in just the first almost, in fact, it's not even been 2 full hours of trade yet, and we're already sitting with gains of 900 points on Sensex. It's a 1100-point gain coming in on Nifty Bank, and that's the real outperformer for the street today. A 2.2% uptick coming in on Nifty Bank. Broader markets are also largely more or less in tandem with the benchmarks. You have a 1.4% uptick coming in on Nifty Mid-Cap Index at the day's highest point. Also Nifty Small Cap looking very good, slightly off the day's highest point, but nonetheless a 1.3% uptick coming in on that front as well. It's a couple of names that are adding to all of this action. Kotak Bank is up almost 4%, NTPC up 3%, Axis also up 3%, BEL, Power Grid, Grasim, SBI, Bajaj Finserv, ICICI Bank. All of these are trading with gains of 2 or more than 2%. So it's actually the financials pack that is doing very well in today's trading session. On the flip side, it's like the names of M&M. That's the biggest Nifty loser today, a 2.5% downtick over there. Titan Trent also adding a slight bit of a pressure to the Nifty, but nothing is stopping its upwards momentum today. On the sectoral front, you have Nifty Bank, of course, the top sectoral gainer, followed by Nifty PSU banks. So very strong participation coming in from the public sector side of the banks as well. Canara, PSB, IOB, PNB, all of these gaining 2 to 3% in today's trade, followed by Realty, Energy. You have Media, Metal, Pharma, IT, FMCG. Auto is on the fence right now. Auto largely on the flat line with a very slight hint of a negative bias, but not much to worry about because it's just a 0.1% cut coming in on auto. A couple of these auto names are in pressure on the back of M&M being the Nifty's biggest loser. But that's how the market is shaping up today at the highest point on the Nifty and looking very strong, very solid above the 23,600 mark as we speak.
Well, absolutely strong seems to be the keyword at this point, and green seems to be the color as far as the market is concerned. But with that, let's start taking all of your stock-related queries. But before we do that, let's also have the number that you can write to us flashing on the screen as well. Do remember to mention the buy price. There you have it, buy price for the stocks that you're already invested in. And for the ones that you hope to be investing in, mention the time horizon that you then have in mind so that we can help you better. But with that, let's kickstart taking all of your stock-related queries. Today on the show, we have Gaurang Shah, who's the Senior Vice President at Geojit Financial Services, joining us along with Kunal. The first query, Kunal, that I have is coming in from Bharat, who's writing to us from Coimbatore. Actually wants to know about 1,700 shares of BEL. Average price is 235 rupees. Wants to know if he can buy more for the next 3 to 5 years. What do you think?
Very good morning to all of you as well as to Gaurang. On BEL, again, very interesting chart. The stock in the last 1 week, 1 month has recovered, I think, more than 20% from 245.50 levels to now 300 plus mark. Looks attractive even at current levels, and the entire theme seems to be coming back into a very strong breakout mode. So would suggest a buy, as well as even if you're looking at a buy at current levels, as well as maybe in case if there is any kind of a mild correction, that could be a good zone where you could look to add further for BEL.
That's a take coming in on Bharat Electronics. Let's move on, and welcome to the show as well. Let's take a look at the next query coming in. It's coming in from, we don't have the viewer's name, but the stock in question is L&T Finance. Our viewers holding 400 shares of L&T Finance at a price of 135. He's asking if he should add more or book profits. Also, Kunal, on the technical front, he's asking for a short-term target. So let's get a contra view on L&T Finance. And Gaurang, we'll come to you first, and then followed by that, Kunal, we'll just come to you for a quick chart check on what the targets are looking like. But Gaurang, you take it first.
Thank you. And thank you so much for having me on the show. Morning to all of you all and to my good friend Kunal as well. Our sense at Geojit is that the entire banking and finance, that includes public sector bank, private sector banks, and strong NBFCs, diversified as well as small payment banks and housing finance companies. If you have a long-term point of view, first of all, my advice is that if your investment is in strong stock in these sectors, be it banking, NBFC, or diversified NBFCs, you should not be in a hurry to book the profits. That's primarily because our view at Geojit is that we expect the entire banking and finance NBFCs to do very well in terms of earnings for not only the fourth quarter, which is coming by, the last quarter of this financial year, but also for the next couple of financial years and quarters to come by. Comes from a very strong pedigree group, that is L&T. We have a positive coverage on L&T Finance from a long-term point of view. And if your investment is from a long-term point of view, my advice is don't be in a hurry to book profits.
And don't be in a hurry to book profits when it comes to that particular counter. Kunal, I'll tell you what, I'll come right back to you because we do have Mohit writing to us from Ludhiana. Wants to know about Star Health, 200 shares, buy price is 590 rupees, and the time horizon that he has in mind is about 3 years. What do you think about this?
So I'm not sure whether you could look to buy at current levels because it still looks like that the stock is into a major downtrend. So I think from 2021-22 when the stock had listed, I think post that it's just gone through a consistent downtrend from 900 plus levels towards a point when the fall was arrested at 500 mark and now at 350-360 levels. There could be maybe a point where, so over the next 1 or 2 months, you might see the stock say coming back towards 450-500 mark, but it's still not a chart which I would believe that it looks attractive from a long-term play. Of course, looking at just the history of the last 3-4 years or so for Star Health. So I would suggest that not to put money into averaging out the stock at current levels. Just hold on to the stock. Maybe there could be better price point where you may look to get a better exit for the stock.
Okay, so that's the take coming in on Star Health. Kunal, I just want to come back to you because remember that day on Friday during our Pathshala day, we were talking about the double bottom formation on the charts, and we have someone who's written to us about that query again. And the stock in question this time is it's Colgate. Okay, it's Colgate Palmolive, and they have 15 shares of Colgate at an average price of 2784. They would like to add more quantity. They're asking for a good level, and they're trying to understand if they've understood what you were explaining that day correctly. Do you think that this is also a double bottom pattern on the charts?
Yeah, not exactly a double bottom, but it says that the stock is holding on to a support. Double bottom generally happens when there is a reasonable bounce which happens for stock prices. Like for example, the Bank Nifty chart which I discussed on Friday's Pathshala, where after a phase where the Bank Nifty managed to hit 48,000 odd mark, there was a bounce of almost 2,000 points for the Bank Nifty. That's generally the idea which we look out for when you're looking at double bottom, not just that the price gets arrested at a certain price point. Now for Colgate, the only good part when I look at the charts is that over the last 1 month, since the end of February, start of March, the stock has been holding on to the 2400 levels broadly. But then the concern with the charts for Colgate is that the bounce is not very sharp. It's very shallow. So there was just a bounce of 40-50 points, which is 2.5% in a market where the Bank 50 and the Nifty is rallied almost 5-6%. So I think in that context, the bounce is very shallow. I would just look out for a point where 2400 mark could be a point where you may look to average further for Colgate. But as I said, not a classical double bottom, which we typically look out for.
Alright, then that's a take coming in as far as Colgate is concerned. Gaurang, I'll come to you with the next one because we do have Hamza writing to us from Madurai, wants to know about Indus Tower. Good time to buy at this point. He's a senior citizen.
So I think this entire pack was buzzing when we heard the news of Starlink venturing and of course the JV is getting formed. So this is a company which provides infrastructure for cellular communications enabling pan-India and of course otherwise. In this tower, we have a hold recommendation from a long-term point of view. If you want to buy it, given the rally that we've seen in the market for the last maybe about 10 to 12 days, and it's not very long ago, I think it was on 4th of March, we were close to about 22,000 or sub 22,000, and from there, in 20 days, we are trading at 23,600 plus levels. So start at current levels, and on dips, you can add on to it. I think that would be a good strategy.
So start and keep adding as and when the stock dips. If it does, Indus Towers, that's the solution coming in from Gaurang. Kunal, coming to you. Next query coming in from our viewer, Mr. Madhukar, who's writing to us from Hyderabad. He wants to buy Tata Technologies and Birlasoft for 2 years period. Please suggest levels to buy. Alternatively, in this sector, if you think there are any better stocks, if you would like to recommend. But other than that, Tata Tech and Birlasoft are names that we've been hearing quite frequently on the show. A lot of people have been asking for it. What would be good levels to spot out for on both of these for the medium to long term? And what should our viewer do right now? He wants to buy. So would it be a good time?
See, price-wise, yes, these stocks would probably have come back towards a, or ending phase of a major correction. But the sector, for example, Birlasoft, I think if I'm not wrong, we were discussing this last week also. So price-wise, yes, very attractive. But the only concern is that the IT index is going through a bit of a corrective phase, and if this correction extends itself for another couple of quarters, which we have seen historically for IT index, that whenever they go into a correction, it's not a one quarter correction for these stocks. The intensity of correction is sharp in the first quarter, and then what follows is a price drag for these names, where over the series of the next few quarters, these stocks, they tend to underperform, consolidate, remain lower at the lower price bands. That's the concern which I am expecting for many of these so-called IT names, whether it's large caps or mid caps. So price wise, as I said, yes, attractive. Birlasoft also, I think last week also I flagged off that sub the 400 mark or closer to this 400 levels could be a good point where you may look to average further in case if your cost price is higher. But then look at these bounce backs, and whenever the bounce backs happens for these names over the next say 3 weeks, 4 weeks of 10-15% rally, those are points where you may just look to lighten the positions and book out your trading profits so that you can get out and shift to some other performing sectors.
Alright, then that's a take coming in as far as those counters are concerned. But with that, time for a very quick breather on the show. When we come back, we continue taking all of your stock related queries. So don't go anywhere.
Hi there, welcome back to Buy Now Sell Now. Markets holding up firmly above the 22,600 level. In fact, we're just about over there, slightly off the day's highest point, not much to worry about. Let's keep it going with all the queries in today's trade. And Gaurang, coming to you. Next query is coming in from Mr. K. Narayana Reddy. He's a retired bank manager. He's writing to us from Warangal, and he has two stocks in question. He holds 50 shares of Bajaj Auto at 9,492 rupees per share and 50 shares of Trent at 6,347. So he's asking, should he average all of both of these at the current price, Bajaj Auto and Trent? What's your view on both of these companies?
The investment is from a long-term point of view, then I will keep my comments restricted to Bajaj Auto because that is where we have the coverage to hold and add on dips in case if you have a long-term time horizon. Our sense at Geojit is that the two-wheeler space is going to see a major turnaround, possibly by third quarter new financial year starting 1st April 2025. Primarily led by the tax changes that the Honorable Finance Minister has put in place. So we have a buy and a hold on Bajaj Auto. Trent, unfortunately, the coverage is not there, but it happens to be one of the strongest performers if you have to reflect upon the last maybe about a year and a half. You see the levels that the stock has taken off on fallback of various news flows. They are venturing into more stores as we go into the new financial year, largely focusing into tier 2, tier 3 cities. Zudio has been doing quite well in terms of contribution to the balance sheet, and disposable income to spend in the new financial year, like I mentioned, third quarter because of the tax changes, is going to throw positivities to the entire discretionary and non-discretionary spend. So the earnings is expected to do well. Unfortunately, since we don't have a recommendation, I won't be able to give buy, sell and hold on Trent.
The next one that we have, Kunal, is coming in then from Dr. Subbiya, who's writing to us about a host of counters. So Cyient is the first one on his list. And the second one that he has is also Persistent, 66 shares, buy price is 5,086. And even Coforge, 50 shares, buy price is 6,662. What do you make of all of these counters? Because he's mentioned that he's currently sitting at a loss at when it comes to some of these counters. What do you make of all of these counters then?
Cyient, Coforge as well as the first one was?
The first one was Cyient, the second one is Persistent, and also Coforge.
Okay. So I think all three of them, Cyient has been a huge underperformer. Coforge and Persistent, we know what's happened to these IT names as well. So, but my sense, as I was pointing out earlier, for I think a similar query, for the mid-cap IT names, Birlasoft, that many of these IT stocks are going through a downtrend force, and now we are at a point where you could probably be at a point where there could be a mild bounce back, but the overall trend for these IT stocks is still on the downside. I would suggest that wait out for a point, because averaging out at current levels may not turn out to be a good strategy when you're looking at this in terms of a potential midst of a trend where these IT stocks are. You could probably get into a phase where these stocks gets into a bounce back mode, but that bounce back zone for these stocks would actually be a point where you would want to lighten up the positions into these names. So adding up positions over here may not be a good strategy, but just wait out for a point where these stocks rally up from their swing lows, say by a margin of 8-10%, depending on how far these stocks have gone through a correction. So broadly, a 10% swing high from the recent swing lows would be a good point where you may look to just about reduce some quantity.
Okay, that's the take on a couple of these names on the technicals. But Gaurang, I want to come back to you on the same query because our viewer, other than holding Cyan, Persistent and Coforge, he also holds OFSS and Sonata Software. So that's 5 names coming in just from this IT pack. That's what his portfolio is looking like right now. If you would suggest him to consolidate, his holdings, if that is your call, then which of these stocks would you pick? Because he has 5 names coming in this mid-cap IT space. So he holds Cyan, Sonata, Persistent, OFSS, Coforge. Out of these, which one are you liking the most right now?
That's a good one, actually. But and one of the important things that we always would like to advise and guide ET Now investors and, of course, viewers is that don't ever overexpose yourself to a particular sector or a particular company. By doing that, you are exposing yourself to a larger amount of risk. If your portfolio is skewed towards a particular sector or a particular company. So, the best thing is to diversify depending upon what is the total value of your portfolio. Don't have a number of shares in your holding, which gets widely diversified. Even that is absolutely not necessary. Out of the names that you mentioned, Coforge, Cyient, and Persistent Systems, these are by and large the mid-cap IT names on which we have a positive coverage. I definitely concur with Kunal's view that in the recent times, because of the concerns from the US tariff, visa related, there have been pressure on the entire IT index and of course the IT stocks universe totally. But we remain optimistic. I think these news flows are still news. It is not yet, implemented. It might get implemented, might. How, which form, we still don't know. In terms of the business commentary, well, the outlook look extremely strong in terms of future business, though some of these companies don't give very aggressive or forward-looking kind of statements. But we remain positive on the IT sector. We have coverage on all these 3 names. OFSS and the other one, unfortunately, we don't have a coverage, so I won't be able to comment. But yes, it would be prudent just in case. Okay, I'm using the word just in case if his portfolio is overexposed or largely dependent on the IT universe, then you need to take remedial steps.
Positive outlook coming in as far as some of those IT counters are concerned, and as far as those 3 stocks are also concerned, a good view coming in as far as Gaurang's stake is concerned.
But on that note, we'll slip into a short break. Viewers, keep sending us your queries and we'll resume addressing them on the other side of this break.
Welcome back. Thank you so much for staying tuned in. You're watching Buy Now, Sell Now on ET Now, and let's also continue taking all of your stock-related queries. The next one, Kunal, that we have is coming in from Satyan, writing to us about a couple of counters. So SpiceJet and Titan are the ones that he's looking at for the longer term. Wants to know if he can accumulate at this point.
Yeah, Titan, of course, yes. I would believe that it's a good level where you may look to start accumulating from a long term. I think 3,000 levels thereabouts has been a good, moving average support on the weekly, monthly charts, a good price point support for Titan on the longer term basis. That's where you may look to buy. SpiceJet, I would be a bit concerned because it still doesn't look like that the stock has formed or arrested a major bottom for itself. That could be a point where it could be possible that maybe the stock can remain at the sub 50 levels thereabouts. Even the recent correction which the stock had gone through was on the back of some erratic volume behavior. So, for example, initially the volumes were on the much higher side when the stock was selling off from 75 levels thereabout, and then in the phase where the stock went through a consistent correction, the volumes kept on being a bit more erratic for SpiceJet. So that generally indicates that maybe at every rise there could be a selling pressure which may originate for the stock. So Titan could be a much better bet from the 2.
Okay, so picking Titan over SpiceJet, that's the take coming in. Gaurang, coming to you, our next query is coming in from Anjali, who's writing to us from Chandigarh, and Miss Anjali is a senior citizen. She has 135 shares of Adani Energy at 1,045 and 50 shares of Adani Enterprise at 2,900. So Adani Energy, Enterprise, 2 stocks from the Adani basket. She's asking for your view ahead. Should she average or exit both of them right now?
It's difficult for us because we don't have coverage on either Adani Enterprise or Adani Energy. In fact, Adani Group companies is something that we don't have coverage, barring, of course, an indirect holding into ACC and Ambuja Cement. I will leave it to my good friend Kulan to possibly take this up since we don't have coverage.
All right, then, Kunal, what's your take?
On Adani Energy, I believe you can potentially hold on to the stock, but it's not as if that the stock is very bullish on the charts. It's just that the risk reward is attractive at current levels. The stock has been very high beta. We've seen how the stocks they tend to behave in best part of the market trends, or at least self trends for itself. It's just that the stock has not been able to kick off the long-term uptrend mode so far. But I believe that there would be a point somewhere down the line that you might see these stocks moving up into a 20-30% kind of a swing mode on the upside. So I think in that anticipation, I would suggest a hold.
Okay, hold on both Adani Energy and Enterprises. Kunal, once again coming to you. Our next query is coming in from our viewer, Mr. Ignatius from Kolkata. He's a regular viewer, so thanks so much for writing to us. He has 50 stocks of PCBL at 385 rupees per share. He can afford to hold for 6 months. He's asking what are the stop losses and targets for this trade. So Philip Carbon, 50 stocks, 385. What's your view?
So excellent chart. I've been tracking this stock over the last couple of years, and I think from a point when it was almost at 175, 185 towards 500 plus levels, even at current levels, I would believe that the stock looks attractive. I think over the last 6 months of this price selling, 350 apparently has been a good base, broadly as a good support for PCBL. So if you're looking at this as a long-term play, then I believe 350 could be a point where you may look to just hold on to the stock. That could be a support point or a stop loss zone. And potentially over the next, I'm not sure over the next 6 months, but I think over the next 1 to 2 years, there could be a point where the stock may come back towards breaking of that 550, 600 mark, which is the previous major highs.
Or rather, the next one that we also have is coming in from Calcutta as well. The next one is on Tata Chemicals, Gaurang. We do have Partha who's written to us about Tata Chemicals 100 shares. Buy price is 965 rupees. I want to know what your view is when it comes to this particular counter.
Well, this is one of the underperforming stocks as far as the Tata Group companies are concerned. And if you look at the earnings for the second and the third quarter, they were equal disaster. We have a reduced recommendation in Tata Chemicals, so I guess it would be prudent to possibly switch over to a more sound stock in the entire chemical basket. We have couple of alternative investment ideas. PI Industries, Vinati Organics, Pidilite, UPL. These are the alternative, recommendations in the entire chemical stroke specialty agrochemical basket. And I think this underperformance is likely to continue on the earnings front for Tata Chemicals for quite some time. So it would be prudent to make a switch to alternative investment ideas like I mentioned.
Switch is the call coming in from Gaurang. But Kunal, what is the chart shaping up to be like for Tata Chemicals? Because our viewer, Mr. Partha, has requested for a combined view, funda and tech both. So while Gaurang is recommending a switch, what are you making of Tata Chemicals on the chart?
See, I'll broadly agree because Tata Chemical has been a huge underperformer. The stock over the last many years, I think, at a point when you try and look at, say, SRF and such other names from the specialty chemical space towards a point when Tata Chemical. So I think except for that news flow which was there for Tata Chemicals in mid of 2024, where the stock moved to I think 1100 plus mark on the back of that news flow regarding the Tata Group. I think except for that, when you look at this, that the stock has been a huge underperformer. Now, of course, price-wise, the stock may look attractive, but holding on to a stock from a sector where there are other peers which have actually done reasonably well, I think would make sense that you hold on to those large cap names and the ones which are performing, SRF, etc. So switch is what I would recommend too.
All right, and Kunal is in agreement with Gaurang. Gaurang, the next one that we actually have is coming in from Nalini, writing to us about Tata Motors, writing to us from Ahmedabad. Wants to know about the 70 stocks that she's holding on to. Buy price is just about 700 rupees. What do you make of this counter?
Well, if I heard you right, what is the buy price? Is it 700 or thereabouts?
That's correct. 700 and thereabouts, yes.
So firstly, I think the best part about the trade is the investment level. We all know 1100 plus was the level for Tata Motors about 6-8 months back. And from there, we've seen the stock retrace almost 50%. Possibly the entire negativity is there in the price now. That is what we believe. We're maintaining a hold or buy on dips kind of a strategy. And like I mentioned, 700 rupees, your risk reward is extremely favorable. And the company is going to work towards having of the commercial vehicle and passenger vehicle business, which will possibly create unlock value. And of course, targeting debt-free balance sheet is something that they already mentioned about. GLR manufacturing in Gujarat Sanand, if that picks up, then it is going to be cost effective, which will improve the earning visibility. So long term, hold on and buy on dips.
Okay, hold and buy on dips. That's the take on Tata Motors from Gaurang. Kunal, coming to you. Next query is coming in from Kiran from Pune. They're writing to us. They have Zomato at 247 and they're holding 1,000 shares. They're asking for a 3 months view on the same. What's the outlook on Zomato?
Well, not extremely bullish on 3 months perspective, but because I think earlier also almost like 2 months back or so when the stock was at 230-40 levels, I had mentioned that the stock would probably come down at least sub the 200 mark. Now in the process of the last 2-3 months, the stock had fallen to sub 200 levels, and now I think it's bounced back to 225 plus mark. But it's still consistently making a pattern of lower highs and lower lows. That's the concern for a stock like Zomato on the short term basis, which means that over the next 1 or 2 months there could be a point where the stock may drag or go into a correction further. So I'm not sure if you've if you're looking to hold on to the stock or not, but I think adding on to the stock at current levels is not something which I would advise. You have to wait out for that phase of correction to end. Maybe that could be closer to 200 or 210 odd mark for Zomato yet again.
Then wait out is the keyword when it comes to Zomato, and there are some short-term headwinds that you should be keeping in mind when it comes to this particular counter. But Gaurang, the next one that we have is coming in from Professor Thomas George, who's writing to us from Kochi, wants to know about Tata Power, 2,000 shares, buy price is 415 rupees. So what do you make of this particular counter? Because the last 3 months and even the last 6 months have not been that good for that counter then.
I think last 6 months have been very challenging for the entire market, right? From October 1st onwards, till about the recent recovery that we saw about 10 days, a week or a fortnight back. We have a positive bias on Tata Power. We have a buy recommendation. This year's budget announcement from the Honorable Finance Minister towards generation of power from nuclear has opened plenty of opportunities for niche and market players like Tata Power and JSW Energy. Their foray into solar is all going extremely well. Conventional power generating capacities is also quite up to the mark. Power demand is going up. We are only in the beginning or the end of end of March. We've seen temperatures scoring up to 38 and 40 degrees. Middle of May, I think April, May is going to be even hotter. Power consumption is likely to go up. We have a target of 460. My advice to this investor would be that just in case if he has investable amount, because he got in at 450 kind of levels as you mentioned, then I would advise him to average a little bit more over here. Even 50% averaging would not be a bad strategy, provided it does not form an overexposure of its total portfolio by increasing the investment in Tata Power.
Okay, that's the take on Tata Power. Very prudent advice coming in. But on that note, we'll slip into a very short breather on this edition of Buy Now, Sell Now and keep it going with all viewer queries on the other side. So viewers keep writing to us and we'll keep taking it with both our experts when we return. Hi there, welcome back to Buy Now, Sell Now. We have both our experts still on with us on the show. We have Gaurang as well as Kunal. So let's keep it going with all our queries and let's talk about the next stock that's in question. And Kunal, let's come to you. Our viewer, Ms. Sangeeta, is writing to us from Mumbai and the stock in question is Aarti Industries. She holds 360 shares of Aarti Industries at an average price of 570. So currently she is sitting on a loss because Aarti Industries 407, 408 thereabouts. Her buy price is 570. So a loss is what she's facing. So she's asking, should she continue to hold, should she average, or should she just completely book loss and exit her holding?
So just hold on to the stock. I would suggest that there could be a point where, say, closer to 440, 450 mark, you may get the stock at those higher levels. That could be a point where you may consider to say or reconsider whether you want to exit or not, because I believe right now at current levels of 400 thereabouts, the stock seems to be into an extremely oversold territory on the charts. Almost like the last 1 year, 1.5 odd year, the stock has gone through a correction. I remember from a point where the stock was at 750 thereabouts, the correction started off for Aarti Industries, and closer to 400 mark, you're seeing the stock about going to a consolidation. And in consolidations, there are periods where the stock bounces off by 10-15%. So I would suggest just hold on to the stock, and maybe closer to 450 mark is where you can reconsider the decision whether you want to exit this completely or not.
Alright, then that's the take coming in as far as Aarti Industries is concerned. Tell you what, Gaurang, the next one that we have is coming in from Ashwin, who's writing to us from Mumbai. Wants to know from within the pharma pack, are there any companies that you're looking at, any counters that you're looking at? Because he's mentioned that some of them are trading at attractive valuations from a 3 to 5 year time horizon in mind. Which ones are you looking at then?
Well, so we have more than half a dozen names, both in large cap and mid cap pharma, but I would not want to confuse by giving a whole host of names and list. I think I would be prudent if I stick on 4 names, 4 large cap frontline names in the pharma universe. We also believe that pharma is something that you should definitely have a look at in terms of long-term investment. And the only problem is these news flows on tariff front as far as US is concerned. Nevertheless, Sun Pharma, Cipla, Dr. Reddy's, and Divi's Laboratories. I think these 4 names are quite strong and frontline large cap names in the pharma universe. You can pick either of them from a long-term point of view.
The names that Gaurang is currently liking when it comes to the pharma space. Kunal, I'm going to come to you. It's a very interesting query coming in. Our viewer R. Ganesh is writing to Bangalore. He's asking, as the share prices are on a rise now, would it be a good strategy to acquire for long-term stocks with low PE and low price to book and with a focus on good performing companies, or is there any other strategy that he should be following now that the markets seem to be recovering once again?
Well, I think Gaurang would be in a better state to answer this, so I'll send it over to Gaurang, my very good friend.
Sure, Gaurang, can you take this one? It's a question on what would be a good strategy right now to focus on low PE, low price to book, or look at some other metrics when it comes to gauging any company right now?
Thank you, Kunal, for that. Well, for low PE and low price to book does not necessarily mean that it's a great investment. From a long-term point of view, these do matter, but along with that, there are a whole host of other ratios and other fundamentals that you look into it in a company like 5-year balance sheet, meeting with the management, competitors, product, services, market share, etc., etc. So I would say that look at the other fundamentals rather than looking at just these two, because these two may be a misguided missile. If you go by that, it can end up in investing in a stock which is weak and which has possibility to go down further. So my sense is that you have to keep a lot of things into perspective and then possibly decide whether to invest or not. Just depending on these two can be a lethal exercise in terms of picking up a wrong stock.
Well, absolutely. So that's the take coming in as far as those particular counters are concerned. But with that completely timed out in terms of queries when it comes to this show. Thank you so much, Gaurang, as well as Kunal.
But on that note, we'll wrap it up on this edition of Buy Now, Sell Now. Viewers, keep writing to us and we'll once again begin addressing all your queries at 11 a.m. tomorrow. As we wrap it up, you stay tuned to ET Now because Markets at Noon is up next.
If you like this video, then like, share and subscribe to ET Now.